Or no?
Oops. Morning. Welcome to Retirement Board meeting for August 16th, 2023. Call the meeting to order. We do have one person in the public comment, Glenn Sherman.
Good morning. We've been sitting out here quietly for a few months, so I just wanted to make sure you didn't forget that we were here. Just a little reminder that we're about 15% down from the last time there was a cost of living adjustment, and the number's looking 3-something, so that should be a little more tenable than 8-something. So don't forget us. Thank you.
Okay. Thank you. All right. We have the minutes from July 19th, 2023. Are there any questions or suggestions about the minutes? If not, is there a motion to approve as presented? Motion to approve. Second. All in favor?
Aye.
Secretary's report for July, Ms. Van Blunk.
Thank you. Attached to your board packet is the Bucks County Employees Retirement System transactions for the month of July 2023. The total amount of contributions received from members in July of 2023 was $1,425,865. The total amount of member contributions refunded in July was $292,751, representing 6 former county employees. The total amount of monthly pension benefits issued in July of 2023 was $4,620,542, representing 1,882 retirees. The following people retired in July of 2023. Stephen Bombay from the Maine Jail with a length of service of 15 years, 11 months, and 23 days. Douglas Getz from Neshaminy Manor with a length of service of 43 years, 5 months, and 4 days. Lynette Gordon from Juvenile Probation with a length of service of 11 years, 7 months, and 6 days. Lynn Haynes from Consumer Protection with a length of service of 37 years, 1 month, and 21 days. Maria Howard Lacey from Children and Youth Department with a length of service of 29 years, 2 months, and 13 days. David Howell from Children and Youth with a length of service of 10 years, 7 months, and 29 days. Donna Honeywell from Children and Youth with a length of service of 27 years, 5 months, and 29 days. Danielle Jervis from Domestic Relations with a length of service of 30 years, 8 months, and 11 days. Jasper Jones from the Maine Jail with a length of service of 18 years, 9 months, and 12 days. Thomas Mayer Sr. from General Services with a length of service of 13 years, 3 months, and 3 days. Mary Wiltrout from the Health Department with a length of service of 13 years, 9 months, and 4 days. And the total amount of death benefit payments issued in July of 2023 was $200,208, representing 3 deceased retirees. Also attached to your board packet is the Bucks County Employees Retirement Fund investment accounts reconciliation for the month ended July 31st, 2023, with a market value of $950,242,329.44.
Okay. Any questions for the controller? All right. Good to see the market bouncing back. We're up, 9.52% over this year, which is a good thing, approaching that $1 billion mark that we were at briefly, which would be nice to be able to say that again, hopefully sometime soon. All right, so if no comments or questions, is there a motion to accept the Secretary's report?
So moved.
Second.
All in favor?
Aye.
Okay. 5 is review of addendum to investment policy statement. Several weeks ago, board members met with John Spagnola from PFM, who gave us some advice regarding our current investments. People who plan for retirement know you set a target usually, how many stocks, how many bonds, what percentage of your funds are in what, and what kind of investments you want in domestic or international, long-term, short-term, et cetera, and then, you make adjustments accordingly as the market changes over time. You decide, okay, well, we're a little low on this or a little high in this, let's make some shifts. And so that's a lot of what we talked about. And so he did make some recommendations. We discussed this briefly at last month's meeting, and board members were forwarded last month the addendum to the investment policy statement, in addition to, I think, to the existing policy statement. And just talking about, the asset classes, growth assets, domestic, international, income assets, real return assets, alternative assets, and the range and where we are right now, and then, some recommendations. So I guess what we're looking at really is whether or not to adopt this addendum, which would allow, staff to meet with PFM and make, the kind of changes that, that PFM is recommending. So that's kind of where we are. Comments or questions?
I have a comment.
Sure.
We were forwarded the proposed addendum as well as a recommendation to amend the investment policy. There is language in there that I disagree with and cannot support. Having carefully examined ESG investing principles, the board has determined that it is consistent with its fiduciary duty and the objectives of the fund to adopt such principles in the investment of fund assets. And I'm reading from the proposed addendum. The advisor is expected to select investment managers on a best efforts policy who will integrate the 3 ESG factors into their investment analysis and decision-making process to the extent that they are material to investment performance. Additionally, the advisor is permitted to utilize investment managers that only partially integrate ESG factors, or in some instances do not integrate ESG factors if the investment is determined to be the best available option. As with other matters relating to the fund, while incorporating ESG investing principles into the portfolio construction process, the management and investment decisions about an individual asset should not be made in isolation, but rather in the context of the fund's investments as a whole and as part of the overall investment strategy. The part that I have is that the board has determined that it is consistent with its fiduciary duty and objectives of the fund to adopt such principles in the investment of the ESG into fund assets. I think we do have a fiduciary duty, and that is to make certain that pension funds are managed to prioritize the highest return on investment. We owe it to our taxpayers, employers, and retirees. ESG underperforms basic index and mutual funds. There's been several recent articles saying that ESG is just not, it is not working, essentially. Harvard Business Review, March 31st of 2022. ESG funds certainly perform poorly in financial terms. University of Chicago researchers analyzed sustainability ratings of more than 20,000 mutual funds representing over $8 trillion of investor savings. None of the high sustainability funds outperformed any of the lowest rated funds. Some investors may be happy to sacrifice financial returns in exchange for better ESG performance. However, that is not our fiduciary duty when it comes to this retirement board, being members of the retirement board. Researchers at Columbia University and London School of Economics compared the ESG record of U.S. companies in 147 ESG fund portfolios, and that of U.S. companies, 2,428 non-ESG portfolios. They found that the companies in the ESG portfolios had worse compliance records for both labor and environmental rules. They found that companies added ESG portfolios did not subsequently improve compliance with labor or environmental regulations. So Harvard Business Review concludes that funds investing in companies that publicly embrace ESG sacrifice financial returns without gaining much, if anything, in terms of actually furthering ESG principles. Forbes magazine, also in May, lagging, so basically Forbes is reporting that some fractures are appearing in the global ESG investment. For instance, BlackRock's largest ESG labeled exchange-traded fund, there was a recent $4 billion withdrawal from that fund. It raised eyebrows. BlackRock has not issued a statement. It's not clear where that $4 billion was withdrawn, where it went. On top of recent performance concerns, lack of meaningful, consistent data combined with transparency issues continue to plague the ESG arena. ESG score providers are drawing renewed criticism in both the US and Europe for using inconsistent approaches. As a matter of fact, just this past week, S&P Global dropped its ESG scoring for some of those very reasons. So, you know, and I can go on. There's 2 more articles on it. ESG sounds nice. It sounds, it's a laudable theory. However, it's not working. And the financial performance is not, they have not demonstrated financial performance. And with that being said, our financial duty is to the taxpayers, our retirees, and our employees. It is not to global companies touting ESG. And so I would have to vote against that clause in the proposed amended to our investment policy.
Okay, thank you. Any other comments or questions?
Can I just ask, and after listening to the controller's statement, the vote here on this addendum includes much more than just that statement. Is that correct?
Correct.
Mr. Chairman. And these, including the ESP, are, as I understand it, because you said we met with our financial advisors a few weeks ago. These are recommendations that he has made to us. Is that correct?
Yes.
I have asked our financial advisor whether or not the millions, hundreds of millions of dollars that we've taken out and invested into ESG, whether or not those funds would have done better than the current ESG funds that they are in now. He was not able to provide me with an answer. Only that they have outperformed their expected. Yeah. So my point is just that ESG is too new and too fragile. And we are risking the pension by injecting basically a political agenda into our investing policy. There hasn't been a COLA in many years. And if this board continues to invest in underperforming funds, we will not be able to provide a COLA without going to the taxpayers for significant money. So I'm just asking that that paragraph be removed from the proposed addendum to our investment policy. ESG is too fragile. There's no rhyme or reason as to how the scores are being given, both compared to the US, to the European market. It's different.
I guess I just want to say, I mean, when we talk about ESG being fragile, that's sort of like when people said, don't get cars when we were riding in horse and buggies. Times change. We need to make investments. Everybody knows that we need to make investments in ESG, and I think it is amazing that we are going to go in here on the low end and we're going to thrive because this is exactly where people are investing their money today. And I will say, I got my retirement statement yesterday, and I'm sure that our retirees will say as well, we have a very nice pension plan, and we're doing just fine. So I'm going to support this. And it's only a paragraph. We adopted this ESG thing a couple years ago, I think. So this is old stuff for us.
Thank you. I did speak with Treasurer Ballerini about this policy. Obviously, she is not here today to testify herself. She is in support of it. I think it is important to note that the way the policy is currently worded does specifically state that if the investment is determined to be the best available option, the fund managers are not required to follow that ESG criteria. So the wording of this policy does put the total rate of return as a higher priority than the ESG criteria. It's also important to note that this policy affirms decisions already made by this board. We made a large allocation to ESG investments more than a year ago, I think, at this point. And interestingly, of them, many of the investments did not have to change where they were placed. Existing holdings of the fund qualified as ESG. So while we described this as a large allocation to ESG, behind the scenes, a lot of those individual investments did not need to change. We were simply recognizing that they met the ESG standards.
Go ahead, I apologize. I would just like to add, that's a good point, that this board did make a major investment policy change a few years ago without amending its investment policy. And today, the board is seeking to make an amendment effective retroactively, essentially, not, and for the reasons set forth, I believe that it's our fiduciary duty to not make ESG a major part of our investment policy at this time.
Okay, I would actually, agree with the controller in the sense that we haven't directed PFM to make ESG a majority of our investments. We've asked that it be, just as you see in a paragraph that was read by the controller, that it's part of the decision-making process. If it makes sense to do it, then you do it. If it doesn't make sense to do it, you don't do it. I will note that after Russia invaded Ukraine, over a year and a half ago, almost immediately after that, I made a call to Mr. Spagnola and asked him about funds in our retirement funds that may be in Russian investments. And he said he was going to research that, and he got back to me, and he said, largely because we put money into, we adopted an ESG platform, a couple of years ago, we hardly had anything in Russian investments. And so I think that's something that certainly our retirees would be glad to know, that their money's not invested in dictatorships that invade other countries. It's not invested in countries like, for the most part, getting out of, I hope, communist China and things like that. So that's the kind of, approach that you take. And certainly I would agree, and I certainly know that there are a lot of investments that sort of labeled themselves ESG when they really weren't. A lot of people jumping into the pool because they were trying to gobble up dollars that people were looking to invest, and certainly that's true. But as we heard earlier, our investments are up over 9% this year, about $950 million in this retirement fund. Certainly the storm of the COVID impact on the economy had an impact on our fund, as it did everybody else, and it still continues to have on some places, including China even today. But certainly I think this is something, I think the paragraph is worded well. As Mr. Bria said, it doesn't lock anybody in. It doesn't mandate that all funds have to go into ESG. It doesn't mandate that ESGs will be the deciding factor. The deciding factor is, does the investment fit, in terms of our targets, and do the professionals who we've hired to do this, because none of the 5 of us, quite frankly, are the ones who should be deciding what happens with this money in terms of a day-to-day basis and what fund it goes in. We hire companies like PFM to do that for us, and so we trust them to make those decisions for us. So that's my thoughts. Chair. Yes, sir.
And listen to the discussion here. we started, and I think I remember when we did this, the ESP 3 years ago, I think we initially.
That's right.
And I think I heard the controller said that she asked a question at the meeting that we had. What was
I
the-
followed up with Mr. Spagnola and asked him if the funds that, the money that we invested into the, I think it's 4 ESG funds.
3 years ago.
Yes, where the money that it came from, in other words, we divested from certain funds and invested in other funds, whether they would have done better had they had stayed.
And you did not get an answer?
I did not get a direct answer, no. Which raises concerns for me. So, I mean, the majority of this board clearly wants ESG. Again, the theory behind ESG is nice. It feels good. Who doesn't want to save the climate from the end of times? Of course we all do. But the evidence shows that ESG ratings are not changing companies' behavior. And the evidence shows that the ESG funds are not doing as well as basic funds. So that's my concern, is that the evidence out there shows these funds are not doing as well. And they're not changing behavior. They're not doing what they say they're going to do. So and the evidence is really starting to come out now. 3 years ago, it was the hot new thing. It was a political fad. And the evidence now, every other week, I'm reading an article about ESG. That the evidence is not there. And that's the concern for me. And I have a fiduciary duty to our taxpayers, to our retirees, and to our employees.
You can find paragraphs to read anywhere. I guess if I knew we were going to do this, I would have brought them. There's plenty of evidence out there that ESG is doing well, and you can find anything you want on both sides. And it is with pleasure that I motion to approve the addendum to our investment policy statement.
Okay, motion made. Is there a second?
I will second.
Okay, motion made and seconded. It's good discussion. Appreciate everybody's point of view.
I feel a little torn here today because I'm just really actually hearing about this. And our controller statements are concerning a little bit to me. I would certainly like a little more time to study this. And I know this is last minute, and my concern was also there's a bunch of other stuff in this addendum that I think is probably very good. And but I don't want to belay this. I mean, is there any way that we can just take that language out? So at least I have a chance to look at it till the next retirement board meeting and vote on the rest of the addendum that, from our discussion with our financial advisor, it seems like it's pretty good.
Well, we do have a motion and a second on the floor.
Okay.
And so I think I think the discussion's been good. And obviously, as you said, we've had discussions back in 2020, I think, with PFM about ESG funding, and so.
And again, thinking of the discussion back in 2020, am I right to remember that there might have been a proposal to actually invest a higher percentage in ESP than we actually voted on? And I think there was some discussion about that we should give it some time before is that right, Dave? I see you shaking.
My understanding was the controller, Neil Doherty, actually, and Kim can confirm this, was that he was against putting so much money into ESG, and he recommended a very small amount to begin with. Is that right?
At the time, the controller, Neil Dougherty, decided that we should do it in tranches and take a look at it after each tranche was moved and do a comparison to see which one was outperforming. So we never, I don't think, completely finalized the last tranche, but we've been reviewing where they stand with PFM.
Yeah. So, and I remember that discussion, that we definitely were putting a cap just because we were doing it in small doses, for lack of a better term. So, which is, I think, still the right approach to take. So,
Could I ask Dave one question?
Sure.
Dave, do you have any idea over the last 3 years that we invested in this ESP, the return from those investments as compared to the return to the other investments that we have in the pension fund?
Sure, so I don't have that presently in front of me. I know that at the time we made the commitment to ESG, we were doing some rebalancing of the fund anyhow. So a lot of the funds that we diverted there, right, we were going to reallocate one way or the other. So it's difficult to say perhaps how they would have performed if we left them where they were in the first place, because that really was an option that was on the table. I think as with all asset classes, there are periods when maybe they're outperforming their benchmark index. There are periods when they're a little bit lower. I think to truly say one way or the other, yes, as an entire asset class, this is doing better or worse, is just something that we don't see in the fund. I took a peek at our last quarterly review. They were numbers through April 30. We run a little bit behind when we get this information. And it looked like some of our ESG EFTs, they were down for the quarter, but up for the year, and in line with many of the other investments in similar asset classes. So I think, as Commissioner Marseglia said, you could probably argue this either way. In terms of the review of our fund's performance, I don't think we're seeing a significant impact.
I would ask that when you do your research, that you look for nonpartisan reporting as to ESG funds. That's what I tried to do, not look at, take basically non-political business reporting on whether or not ESG investment is working. I know I think we put $100 million into PFM's two funds. It's down to, what did we put it, 80 million or not, 100 million? 80 million, I apologize, 80 million. It's 70 million today, the market value, I think. It has not recouped from last year's losses, although there's been some gains in one of them. I have not looked at them to compare them if they would have done better. Whether or not a fund is exceeding its benchmark is probably not the standard we should be looking at. The standard should be whether or not we can make more money for our pension in funds, in certain, in our investment strategy. Of course, diversify. So I'll just leave it at that.
okay.
We do have a meeting with our investment advisor coming up in September. We could ask him to do a review for us, possibly of fixed income, since we have ESG fixed income and we have actively managed regular fixed income. And we could see if he could get us some sort of report to analyze that for us.
I assume he does. I assume he should be doing that regularly anyway, and we can certainly talk to him in September about that.
I will add, though, that I was pleasantly surprised because ESG, there's been some reports out there that the actively managed ESG funds tend to basically slap an ESG label on it and charge excessive fees. I did learn that the fees that our pension is being charged are not excessive. They're in line. So that's some good news.
All right, so motion's made and seconded. We've had some good discussion. All in favor?
Aye.
Aye.
No.
Opposed?
No?
Okay, thank you. Other matters to come before the board? Okay, Hearing none, move to item 7, which is adjournment. Is there a motion to adjourn?
So moved.
A second?
Second?
All in favor?
Aye.
Thank you.